I'm really frustrated because I just decided that day that I was gonna risk $1,000 per each one of these when I'm supposed to be risking no more than $400 right now per trade. And in this one circumstance, the second I decided to start risking way more than I should have on 2 different trades, immediately was wrong. Like the next morning, they were gapping down 10, 12, 13%. I have to stick to the plan because I'm not just gonna cut randomly before my risk level. Did get stopped out of both of them through their death lines within the next day and a half. So the next morning when they gapped down, my tight risks were long gone. Very upset with myself on the execution because that's not something that I've done a lot of this year in terms of losing more than I want to. What's going on, everybody? Dom here from Clover Trading, doing best and worst today. So we're going to talk a little bit about the best trades that I've taken in 2024 so far. It's been a very fruitful year, full of opportunities. Been working on my experiment with myself of severely downsizing, risking a whole lot less, and it's been a really good result so far. So let's talk about some of the best trades. First, Fannie Mae, FNMA OTC stock. Basically the only OTC I really trade anymore. Been trading it for years, and I've been doing this since 2016. And it seems like every year or two, there's always a great opportunity on it. The majority of my year is actually represented in FNMA. Risking about $300 a trade, I've netted over 29,000 on this ticker this year, long and short. And it really comes down to the simple truth of, we talk about structure of the setups, but to me, behavior is really important. And when I find a stock that over and over again does a very similar method to breaking out, and you can see, even if we go into the end of last year, this stock has been really solid every time around in terms of how quick it makes its moves, how much it consolidates beforehand, getting good risk reward, a very thick stock, so not one that's just gonna lose its bottom and you come back to the computer and find yourself down an extra 5 or 10%. And when it works, it works. And I've traded every breakout from December of last year to January of this year. And my most recent big trade that I took on it, where the majority of my profits on this stock are from this most recent move from the 120s all the way up towards 2. And I actually was in the stock for about a month for this hold. I really do like swing trading when I can get, an entry near the death line. In this case, it's very obvious to see that 120 area is the area that stock was holding for multiple weeks, over a month actually. And it was very obvious to know what the triggers were, when the volume was going to increase, and what I was going to risk. And once I have a stock that I really trust to go up, once it starts to move, and I know that it can move in a very positive manner, all that really matters is that I have a good risk level. And once I do and trust it, I can be really patient with those positions. And so I was actually buying the stock in the 125 to 128 area and just risking off that 120 area. Once we broke the 130s, I moved risk to this low in the 123 area, and then was just super patient. I didn't get the move I was looking for in this initial breakout through 150, but I didn't want to give up my average. I'm a trader who really likes to value risk reward over everything, because the more risk reward I can make on any one trade means it's going to cover a whole lot of losers. And that's really my end goal, is even if I'm go through a stretch where I lose 3, 5, 6 in a row, knowing that all of that and more will be covered by one trade. And then, the whole goal here was to try to sell towards $2. On the day that we finally did push there, I had an average exit of 195. I did have some sells at 199, the dead top here. And that's pretty much been Fannie Mae. It's been a really solid breakout based off its behavior, knowing that what types of moves it has when it does break out, when I should be interested in consolidation. Really the best part about this stock is just the way it moves, and how once it does consolidate in really tight ranges, I can get myself in really, really good risk reward situations. The next best trade of 2024 for me was HOLO. Pretty incredible move that got this, really kicked off a crazy market for a couple weeks in terms of gappers. It was not uncommon during that stretch to have 300, 500, 800% run gappers on the day. And a lot of them were, I know Huddy can probably attest that was a really stressful time for him, because there was just so many gappers and so many big gappers. It wasn't uncommon for him to have 5 stocks on watch on any given morning to be attacking for shorts. And this stock went from the 2s all the way up to the 40s in a 2-day run. For the most part, I'm avoiding day ones, the continuation of the move. Most gappers I'm avoiding and just wanting to see what they do, see their volume, see who's stuck, who are the players involved, learning a little bit about the stock while I'm not trading it, so I don't need to lose any money to learn how it trades, really waiting for the stock to come into my realm, looking for first red days, looking for first green days, consolidation for breakouts. On HOLO, the first time I traded it was this first green day candle right here, where the stock ran after going from 2 to 40, pulled all the way back to 15, so over 50% off the highs. I love trading these higher priced first green day reversals because when there's that much range on a thinner stock that can move $5, $10, $15 a share with ease, the first green day is a great time on that stock to actually get good risk reward because it's not super volatile. It's been fading, backside is in, shorts are comfortable, longs are working themselves out or looking for an entry lower for a potential bounce or an investment, whatever they want to do at lower prices. And there's usually a moment in a morning when the stock's only trading, when it's used to going $5, $10 a share every day plus, a morning where it's only trading in like $1 to $2 consolidation. And I did really well buying this in the 16s and selling in the low 20s. It did end up going a lot higher and actually breaking out that day. I wasn't that patient with it, but it was really a phenomenal trade for me. Really great risk reward. I think I risked 300 to make over 2,000. And then the next trade, a best trade for me, was again on HOLO. And it's not uncommon for me, again, to have certain specific situations or stocks that make up a decent percent of my month or year. Because once I find a situation that I like and I am really adapted to what the chart can do and I wait for it to come into my patterns, I tend to do really well on those. And I ended up buying this breakout through the 42 area on this big green day here on 216. Volume wasn't optimal, but I've traded a lot of these kind of $30 to $50 tickers in my past that don't belong up here, that when they do break out and shorts are really in a tough spot, you can see pretty insane moves of 15, 20, $50 a share. And in this case, this breakout through 40 ended up going all the way up towards 100, topping out of the 97s. And I was really patient on this one. I was buying this in the 44 to 45 area on this big green day here once it proved that the stock was going to break out over this multi-week resistance. I think my average exit was in the 80s. I think I made over 100% on this trade here, buying in the 40s, selling in the 80s. And again, really small risk. You know, sometimes I'm looking to buy early like Fannie Mae and hold for a longer period of time to really maximize the risk reward. Other times I'm buying stocks that I expect to either break out or fail on that one given day. And when that stock is consolidating in the 40s for the first 30 minutes, hour of the day, it feels like it's either going to go nuts and squeeze out a lot of shorts, or it's going to fail and backside's going to ensue. And on that morning, again, looking to get $3 to $4 of risk to make $30, $40, $50 a share. Pretty incredible opportunity. I did really well on that one as well. Those are my best trades, all from the long side. That's where I really can maximize my risk reward, especially doing this experiment for myself in 2024, where I'm using a whole lot less risk. Shorting doesn't make as much sense to me because it's really difficult to maximize risk reward on the short side. But from the long perspective, there have been really great opportunities, whether they be breakouts, whether it be OTC breakouts or first green days, where I can find myself risking very small and making really good risk reward to the tune of 5, 10, 15 to 1 in a very short period of time.
Ever dreamed of trading like one of the Clovers? Well, it all starts with the right broker. Clover Trading and Centerpoint Securities have teamed up to supercharge your trading experience. By joining Unlock the Power of CP Edge exclusively with Centerpoint. We're talking top-tier trading tools worth over $6,000, all at your fingertips. Get ahead with real-time scanners, cutting-edge news, and a tailor-made trading journal. Experience trading like never before with superior short inventory, personalized support, and interest on your idle funds. Plus, you can get competitive pricing that fits your trading style. Ready to elevate your trading game? Click the Clover Trading link in the description below to get exclusive deals with Centerpoint Securities. Now let's get back to the content.
Now that we've talked about the best trades of 2024, let's get into my 3 worst trades of the year so far. It's not always the case that your worst trades or your biggest P&L losers are horrible, disastrous mistakes a lot of times. And I think we'd all wish that they just be normal trades that are just a little bit bigger due to a little bit of slippage or a little bit bigger sizing because the quality of the trade was better. It just so happens that this year, my worst trades of the year P&L wise are mistakes. One of them is a little less of a mistake, and that's the first one, which is DJT. When I was trading it, it was DWAC. Most of you guys know that I am a long bias trader, so when I do short sell, it's either because I have a bigger picture in mind with wanting to hold for bigger parts of the move with wider risk, kind of like I do with breakouts, but not have to necessarily time volatility perfect. And once DWAC, at this point, it had already gone from 16 up towards $60 a share, pulled back down towards 32, and then had a pretty nice bounce for over a week back towards $50 and was actually holding underneath $50. So I put on a swing trade idea that we would probably, if we didn't go on to set up for a breakout back through the highs, that we would pull down back into the low 30s, and that would be a good area for me to cover in a couple days or a little bit over a week. So I got short in the 46 area after it looked like the top was in and I could put a stop in over the highs, and it started to work to my plan, started to fade off. And on this trade, I was risking about $300 and things started to work out. We bounced off of $40. At this point, I'm comfortable. I'm not really watching it every second because I'm up on the trade. It's a swing idea and I prefer to just kind of let it work. And then once it gets my price targets, I'll take it off. Ended up waking up on this morning, 2:15, to a big gap up through that $50 area. So this was one of those situations where I got right to the market and took it off over $50 and ended up losing more than what I wanted. It was a little over a 2R loss, which isn't, for me to have that being one of the 3 worst trades of the year, that is phenomenal to me, that my risk management is so good that a horrific situation like this in which I only lose a little bit over 2R when I get gapped up on news and I go from being up really nicely on the trade, like $5 a share, to down, $5, $6, $7 a share. So I took it off right in pre-market, ate the loss. People say cut losses quickly or cut losses intelligently. Once it's past my risk level and it's a situation that I'm not expecting, now we're up towards the breakout level over $50. I don't want to be in it, even though I'm not able to cut right at my risk level because it was a gap up. I did take it off and it was close to an $800 loss, risking $300. So it was a pretty frustrating situation, but that is the game we play, and that's why it is so important, when you're trading, to know news, when news is going to come out, or to be near your computer in after hours and pre-market if you are holding stuff overnight or into the after hours, because that's when a lot of big moves can happen. The next 2 big losses of the year, the worst trades, were very recently with ACB and then CGC. These are really frustrating to me because it wasn't just like a normal trade that ended up being a little bit bigger of a loser. I made a lot of mistakes on these trades coming off the heels of having traded them quite well. A couple weeks ago, I bought this ACB breakout and did quite well on it from the 4s all the way. I sold it near 6, but it ended up going all the way towards 9. CGC, the same type of idea, buying it in the 8s, it went into the 11s. So that was 2 weeks ago. I did really well on them. And then this past week, I started thinking that the sector wasn't done, that it had to break out again, and that these 2 were gonna be the sector leaders and probably do something similar to what they did in the past, which is have that big blow off top where they kind of have, mediocre breakouts that are going 20, 30%. And then we'd finally have that one where it goes 40, 50, 60%, and CGC would push into the 13 to 15 area, and ACB would go into the 10, 11, 12 area. I'm not really upset with my ideas on these in terms of just kind of, once I know what risk level I want, to get involved, put a stop in and just let it play out, which I was doing up in this area. I'm really frustrated because I just decided that day that I was gonna risk $1,000 per each one of these when I'm supposed to be risking no more than 400 right now per trade. And I think we do that sometimes with trades. When we have a wide risk level, we convince ourselves to take more shares sometimes because we also convince ourselves that we're probably not gonna get stopped out. And if we do, we'll have plenty of time in between that we can either downsize, decide we don't wanna be in the trade anymore, whatever it is. And in this one circumstance, the second I decided to start risking way more than I should have on 2 different trades, immediately was wrong. Like the next morning, they were gapping down 10, 12, 13%. I have to stick to the plan because I'm not just gonna cut randomly before my risk level. Did get stopped out of both of them through their death lines within the next day and a half. The worst kind of part about this is that I made it worse. I can live with just having sized up a little bit and taking bigger losses on quality of plays that I like. With this strategy, actually sticking to my risk level and holding it. And I wrote this in the Clover room that I wanted to have my wide risk trades and I was gonna risk a little bit more. And then I wanted to have like secondary type of maximized risk reward type of trades where I would risk tighter, where I would get more size and look for maybe a smaller move, but maximize risk reward, still try to make 5, 10, 15 to 1 risk reward. And I did that, within an hour of buying the swing trade ideas. So the next morning when they gapped down, my tight risks were long gone. And so I ended up losing more on the swing trades and losing more on the short-term ideas as well. So I turned from one rule break to the next, to the next, and all of a sudden, I lose significantly more than what I would on a normal trade. And that was really frustrating for me to kind of come after having done well on these tickers. And I'm not mad about the idea of the trade. I'm very upset with myself on the execution because that's not something that I've done a lot of this year in terms of of losing more than I want to, or kind of compounding that loss with multiple rules broken. So those are my 3 biggest losses on the year and worst trades kind of all together in one. Still happy with how I've managed risk this year so far, but obviously it's something that needs to be worked on consistently week in and week out, because bad trades do sneak up on you. Disaster will try to hunt you down in the markets when you are at your low points, or if you are struggling with your emotional balance in the markets. And having the discipline to know when you're breaking rules and how to get out of those situations and fix them, like I'm doing right now, like Kyle did a couple weeks ago with his drawdown, it's very, very important. So those are the 3 worst trades of 2024 for me.